Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. What a volatility. I don't think that I've seen such a volatile market for the past many months. It was hugely volatile. And yesterday, US markets ended mixed. Nasdaq was higher. Of course, Asian markets were down. That's because, the Credit Suisse issue was not factored in by the Asian markets yesterday. But European and US futures were higher, and I thought markets will open flat or slightly positive. But market opened slightly positive only, but immediately Nifty went for a huge sell-off. In just matter of half an hour, Nifty has fallen 150 points, only to shoot up nearly 200 points in the next 6 candles. I'm talking about the 15-minute candle. And again fell, again went up, again fell. It was hugely volatile, and the Bank Nifty. And after a long time, some skilled option buyers would have made killing today. Option premiums were going from 10 rupees to 100 rupees, and both call side, put side. And if you know the technicals, you would have made a very good money. I follow a intraday technical, so that has given a very good handsome return today. Number one, it's a huge volatility. There are a number of reasons for the volatility. Number one, I always say markets will be highly volatile either at the top end of the trading range or at the bottom end of the trading range. So as I told you, 16,800 to 17,000 is supposed to be a hugely supportive area, and we have already fallen nearly 2,000 points. And in fact, as per Bloomberg, and India has lost 11% of its market cap from January to March, whereas most other major economies have added the market cap. And India is distinctly underperformer in the entire world market. And everything started from last week of January from Hindenburg. But Adani stocks have stabilized, but other stocks have not stabilized. And then to add fuel to the fire, this Silicon Valley Bank and Credit Suisse, all the banking stocks. From last Thursday high to this Thursday low, Bank Nifty has fallen 3,000 points. Last Thursday to this Thursday, how many trading sessions? 5 or 6? Even if you include both Thursdays, it's maximum 6. And 3,000 point fall. That was the kind of severe fall, so the market faced. So, very, very clearly, India is hugely underperforming. And today, look at the Reliance. Third straight day, hitting the 52-week low. And today, it almost touched 2,200. So, remember 2,200 to 2,800 is the swing range. I always say about Reliance Industries. But 2,202 is the low today. Anyway, Reliance is expected to fall because, crude oil crashed. The crude oil crashing is actually not good for Reliance Industries. So, surprising, IT stocks also fell. I thought, the Nasdaq was doing well in US. That means Nasdaq is a technology heavyweight index. So, I thought, IT stocks will do well, but they have done very badly. India VIX came down slightly, but still March is a month not to remember by the bulls. Usually, 3 monthly red candles will always be followed by 4th green candle, but this time 3 monthly red candles followed by another very big red candle. So this is a worst correction. I think as per Bloomberg, the March 2020, the coronavirus period. So that was the period we had a huge market cap loss, and after that, so this is the highest market cap loss. So definitely something is not going well with the Indian markets, and you all know very quickly I changed my view. The first week of January I was bullish, but by 3rd week, 4th week I changed my view. At the end of the day, FIIs have actually sold very, very little, only 282 crores. The domestic institutions have bought for 2050 crore. And still market can fall like this, market can be volatile like this. It's all because of intraday traders on expiry day. You wait for tomorrow in US markets, quadruple witching day, it will be even more volatile. So that is the nature of the market. So let us hope that the market will be forming a bottom formation process between 16,800 and 17,000. And as and when market crosses 17,000, so we can hope market recovery. Bad thing is that so yesterday as well as today, Nifty closed below 17,000. Good thing is that both yesterday and today, Nifty future closed above 17,000. So let us hope for best. And I think now today European Central Bank meeting is there around 6:45, and then after that there is nothing much data is left, and we also left with only about 9 more trading sessions. So today is a weekly expiry, so there is no point in looking at the open interest. So open interest will start building from tomorrow for the next week. So anyway, today's low should be the low. If today's low is broken, I will turn ultra bearish. So that is the view right now. So let us see what is going to happen. So today is a highly stressful expiry day. So enjoy your evening. Hope you enjoyed watching this video. Thank you for watching.